Hi everyone, and welcome to this week's analytical live stream from Exness. I'm Michael Stark, Financial Content Leader, and I'm going to be talking a little bit in the stream about some of the important data that's happened recently and news, what's coming out this week, possible upcoming news and developments in the news, and of course analysis of charts, and a look at all of the questions that you might have. Should have plenty of time to answer the questions both during the session, during the stream itself, and also after the main presentation part of the stream. So if you do have any questions, that would be great. Please, by all means, ask your questions. That would be awesome. So let's have a wee look at the chat before we start. We can see who's joining from where and what you're saying. We have Fit Human 12 says hi, waiting. Yeah, we've started now. Fit Human 12, welcome on board. NBA Demigod says mentor. Okay, good. Welcome NBA Demigod. Yeah, that's an amazing handle there. If only I had that one. Trade with One Skill says Exness is really great broker in the world. Great, glad to hear. Trade with One Skill that you like Exness. I also like Exness. That's why I work here for a few years now. There are some bad brokers out there, certainly, yes. Trade with One Skill says from Pakistan, Farrukhabad City. Welcome, Trade with One Skill. Thanks for coming. From One Skills Academy, it's a really great broker. That's good. Glad to hear you think that. Fit Human 12 is also from Pakistan. Welcome on board. Fit Human 12. Consa City Bro says Trade with One Skill. Okay. Welcome. And then I am Julius00 says hi Michael, Julius here from Ghana. Welcome on board, Julius. Thanks for joining us for the stream. And Chinyama Chilila, sorry I'm not pronouncing your name very correctly. Sorry about that. Chinyama Chilila says watching from Zambia. Welcome on board. And then Trade with One Skill says hi again. Yeah, hi Trade with One Skill. So thanks everybody for joining. If you have any questions at any point during the stream, please by all means ask your questions. That would be great. It's always good to have questions. Makes the session more engaging, and I think it makes it more fun. Well, it certainly makes it more fun for me, but hopefully also makes it more fun for you. And NBA Demigod says from Ghana, welcome on board. NBA Demigod, thanks for joining us. Really amazing user handle. It's one of the best I've seen for a while, actually. Yeah, good one. So let's start the stream now, right? Without further ado. Before we start, just need to remind you here, please, that everything that I'm doing here is on a demo account. This is a demo account. I'm not doing any live trading with real money. Not doing any live trading at all. And none of what I'm saying here is advice or recommendation to do anything. I am not suggesting that you trade or not trade. Not suggesting you trade anything specific in any specific direction or set a stop or a target. Anything that we're doing in this session is just for informational purposes. And remember that if you're asking me a question or if I'm presenting opinion about something, what I'm saying is just my personal opinion. You always need to do your own research. You need to manage risk. You need to remember that, what some essentially random person says in a live stream on YouTube is not investment advice. It's not tailored to your personal circumstances or anything like that. So just remember, please, demo account, not doing live trading, not using real money. So for the personal area of Exness, we go to the left tab of the personal area of Exness, we find here analytics. There's 3 sub-tabs here. Firstly, we've got analyst views, which if you click on here, you can get a few ideas for trades, which come from Trading Central. Usually it covers Forex pairs, it covers metals, it usually also covers crude oil, sometimes it covers indices too. And when we click on one of these, we're taking the first one as an example. We've got dollar loonie intraday. And it tells you what Trading Central thinks is the potential target for if you're trading this. In this case, it would be a sell. And it also gives an alternative scenario for what might happen if the direction actually reverses. So this is something that you can use with caution to integrate with your own approach, your own strategy, and your own analysis. And also under this tab for analytics, you can find market news, which comes from FX Street. It's a feed covering the latest news for all of the most important Forex pairs primarily, but also it covers gold, and usually it covers crude oil as well to some degree. And you can click on these, you can usually click on these items of news and you can see the full details. You can read through that. Then the third sub-tab that we've got here is Exness's economic calendar, which if you've been following the streams recently, you would know there's been recently updated. So that's great. It's much, much more useful now, Exness's economic calendar, compared to the past. And it shows you all of the main releases and many of the less important releases as well, which you can analyze and you can take a note of. You can also see the actual release once it comes out. the forecast and the previous release, and it gives you a handy chart to allow you to compare between the releases. So that's great. This is a very big improvement. Exness economic calendar, and it's really there will be continuous improvement with it, of course, and definitely think it's a lot more usable. It's a lot more convenient and user friendly in general. UX is massively improved, and overall versatility, usability of the economic calendar is massively improved. So just huge shout out to the web team that's been working on that. So for this session today, we're going to be looking firstly through some of the main events that have been happening recently. So some of the most important things that's happened so far this week are the Japanese elections. We'll be talking about that in a little bit more detail later. And we've also noted that we've got overall moderately weak French data so far today. Meanwhile, we've seen that gold and various shares have done better lately, since we have less general nervousness and I think some degree more risk-on sentiment compared to what had been happening a couple of weeks ago. Main significant news since around other main significant news, since last week's stream, is we have the delay for the NFP. NFP is actually coming out tomorrow for January, as opposed to last Friday. It should originally have come out last Friday, but for the partial government shutdown. So that's one of the critical releases that we've got coming up this week. We're also looking ahead, or I personally am looking ahead closely to British GDP, which is on Thursday, so 2 days from now. And then finally, among the top releases this week, we've got American inflation on Friday. Really super important release, which is very likely to affect what the Fed is going to be doing, to some degree at least, for the rest of the year. Yes, so if you do have any questions, you have anything specifically you want to be covered, please by all means ask. That would be great. So let's firstly look at the NFP. Let's look a little bit more closely at what we might maybe expect there. Currently, the consensus is for about 70,000, so it's a rise of about 20,000 compared to what we had in the release for December. And that would broadly be somewhat positive, but overall, I think the significant factor here is that we're still working under the assumption that the job market in the USA has slowed down significantly compared to about this time last year and slightly after. Since around May last year, although it was only really known from the late summer when the data were revised significantly, but since about May last year, we've had an obvious, pretty consistent, not super consistent, but moderately consistent slowdown in the American job market. And that's one of the factors that has given the Fed more leeway to cut rates, seemingly. It's given it more options to cut rates, even though inflation remains above target. It's quite likely inflation is going to remain above target for a while. But the counterpoint to that is I think we still have some kind of knock-on effect from the government shutdown in September, October, in that these data generally are less reliable than they usually would be. So we didn't have very big revisions, generally speaking, for the last couple of months. That's true, but we've had fairly significant fluctuations. We've had some degree of revisions, both to the rate of unemployment and also to the total non-farm itself. So that's something that we want to continue to watch. Something that has been generally, I would argue, out of focus recently, or at least for me, maybe some people are still monitoring it closely, that's great, of course, is average hourly earnings. Part of the reason for it being, I think, less in focus, let's say, if not totally out of focus, is it doesn't show any very obvious trend over the last few years. Annual average hourly earnings, it remains pretty high. The rate of increase remains quite high, considering the circumstances in the overall job market. It's just not nearly as high as what we'd seen in 2022, around when there was really significant pay hikes. And the situation with inflation was, of course, totally different from what we have now. But that's something I think we should at least occasionally monitor, although it's not something that's particularly in focus. Right, so if you want to look a little bit more into the detail of the NFP, of course, welcome to do that. And I think one of the key releases for me this week is British GDP. In that recently we can say that the situation for the British economy is, it's not terrible, but it's certainly not great by any means. The growth is not great. Initially, the rebound from the recession in 2023 was pretty strong, but seems to have petered out somewhat within the last few quarters, Generally, lackluster growth, pretty close to stagnation, because we have rates in Britain remaining pretty high at 3.75%. Within the same range as the Fed. Inflation also remains quite significantly higher than the USA, which is quite an important factor, although growth is, of course, much, much, much worse than in the USA. In Britain, and the jobless rate is also higher. So it's a more difficult situation for lots of different reasons for the Bank of England, but there's something we want to watch. I mean, is it actually going to be going up the quarterly figure to 0.2%? If so, possibly some support, some tailwinds for the pound and some of its pairs at least. Otherwise, possibly some decline for the pound. So that's important for release we want to try to watch. And of course, annual headline inflation from the USA on Friday, really critical release that we want to try to monitor. Since currently the consensus is for it to decline about 0.2%, 2.5%, but some estimates have it going down a full 0.3%, which is a fairly significant change. And if we're getting inflation going down, which seems at least fairly likely, then that's, again, something that would be broadly positive for the Fed to do more cutting, to decrease rates further, which is likely to happen. We'll look at that in just a minute. But there's some degree of debate or intrigue as to the extent to which that happens. So I want to look at this week, right? Well, actually, let's just look at this month. Give me a second. No, sorry, not next month. I want to look at this month for earnings reports. Generally speaking, last week or so, we've had broadly positive earnings from most of the major companies, most of the major American companies, that is to say, that we're concerned with as CFDs. Generally pretty positive results from earnings reports. Few exceptions to that, but not terribly many. Disney, I think, probably would be the main one, right? Yeah, mostly quite good earnings. I think you could say that. But I mean, for Disney, it was up there somewhere. But for Disney, anyway, it's not so much earnings, as general situation is not super positive for them. And we don't have any really, really super important earnings reports coming out this week yet. Coke today, of course, yes. Cisco Systems tomorrow, yes. Of course, these are important. And there's various other companies that might affect indices, of course, but not super likely to affect as individual shares, and maybe not to affect the top indices. So it's not super important week for earnings, just something that we want to have kind of in the back of our mind. And then let's look a bit briefly at the chat, see if anybody else is saying anything. Currently, no, so that's fine. But if you do have any questions, please drop your questions in the chat. That will be great. Or comments, doesn't necessarily have to be a question. Preferably not too many negative comments because, unless they're constructive. But anyway, let's talk about that later. I'm sure we'll get some nice negative comments. So the significant change that we've been saying for the last few weeks in terms of FedWatch. Last time we had a significant change in this was late last year. In that, for much of the last quarter, that is to say the fourth quarter of 2025, we had been expecting a cut by the Fed to 3.25 to 3.5% in April. And that's now shifted back pretty decisively to June. And even then, I mean, it's a pretty large majority expecting at least one cut by the middle of June, but it's still not certainty by any means. You've got about 75% probability. Certainly does not mean it's guaranteed. Whereas by the end of the year, we still have pretty large plurality, pretty large majority, 75% approximately expecting a total of 2 cuts. And that has not changed really at all for quite some time. I mean, obviously, it's a little bit imprecise, to say the least, to try to predict what the Fed is going to be doing in December, where the rates are going to be in like 10 months from now when we're here on the 10th of February. But, I mean, this is what we have and what we can try to do, and we'll try to monitor any updates to this, of course. It's just a kind of a ballpark. Roughly, this is the kind of area that we're looking for rates to move into. Okay. And I don't think we're very likely to get any significant changes to that just as a result of this week's data. Because yes, okay, we do have the NFP and inflation together in 1 week, which is very rare. So we're likely to get a lot of volatility on the charts. We'll talk about that more in a moment. But I don't think it's very likely that either of these releases, or even both of these releases, unless they're very surprising, is going to significantly impact what the Fed's going to be doing later in the year. Of course, could be wrong there. That's just an expression of possibility. So let's look a little bit at some charts, right, with this kind of overall context from fundamentals. Let's look at some charts. And if you have any questions, somebody does have a question. Trade with One Skill says, is Exness provide Jazz Cash and Easy Paisa in Pakistan? I don't know. I'm afraid I'm not the right person to ask about payments. So the simple answer is I don't know. The more complicated answer would be you should probably be able to go into your personal area and you can check the different methods available for depositing. So, whoopsie, sorry, because this is a demo account, I can't deposit real money into this. I stress this is a demo account. And you should be able to see all of the methods of payment that are available for you from the personal area. So this is the left tab of Exness's personal area, payments and wallet. We've got deposit. These are all the ways that you can deposit. And then withdrawal, all the ways that you can withdraw. And usually, I mean, there are various exceptions, but usually, most of the time, you would need to withdraw the same money with the same method that you deposited. This is due to anti-money laundering laws. Long story short, there is obviously more to it than that. So if this is offered, where has that gone? Helpful moderators have whatever it was that you were asking about, Mr. I don't know. They've all gone. Anyway, whoever was asking about that, sorry, I can't remember who it was since I can't see it anymore in the chat. You should be able to find it here. Any payment methods you can find here. If there isn't a payment method that you want to be added, if it's not here, I suppose you could contact support and ask them to introduce it. But most of the time, like I would say actually like close to all of the time, if there's a popular method of payment and it's not here, there is a reason for that. It could be it's too slow. It could be the fees are too high. It could be there is some kind of logistical issue with integrating it. Could be there's a technical issue with integrating it. Could be all sorts of possible reasons that's not there. But almost always, with very few exceptions, there is a specific reason for it not being there. So, I mean, don't ask, don't get, as I like to say, of course. And various other traders like to say too. But, it's probably a reason for it not being there. So, Ryan Jarius says, watching from Uganda. Welcome back, Ryan. Welcome back, Mr. Ryan. Thanks for joining us. As somebody else who has been with us a few times in the past. Nice to see you again, Ryan. Abe Meta 1071. Does Exness have auto withdrawal process which does not require manual approval? The short answer is no. This is a complicated and a little bit, how would you say, spicy topic, let's say. In that regulation does not allow fully 100% automated withdrawal. No regulator will allow fully 100% automated withdrawal because we need to match anti-money laundering laws in various different countries. But I can tell you, Abe Meta, that the process of withdrawal in almost all cases is automated apart from the final approval. So most of the time, there is exceptions, but I would say the large majority of the time, you can get funds back with crypto in about 15 minutes. That has been my experience consistently in the past. But the simple answer to the question is no. There is no withdrawal process which is fully automated and doesn't require any manual approval because in terms of regulation, that is not allowed. It's not permitted for any broker, to my knowledge, to have fully automated withdrawals because this violates the anti-money laundering laws of, I think, probably any country that has anti-money laundering laws. But again, if you want a more precise technical answer on that, Abe Meta 1071, you could go to Exness's Help Centre. I suppose it's possible to ask support, but I think it'd be quicker. You could find an article about that on the Help Centre. So with Exness, when we say automated withdrawal, we do offer automated withdrawals. It doesn't mean it's fully automated. It still requires manual approval, but usually it's just a case of like 1 second check and then tick in the box. Yeah, because that has to be done for regulation. So hopefully that answers your question with the simple answer and the slightly more long-winded answer. And if you have any more questions, please by all means ask. I would just stress that you're asking about payments, deposits, withdrawals, methods of payment. I'm maybe not the best person to ask about that because this is a live stream about analysis and about trading. It's not about payments. But if you have any questions about payments, you can ask them. I just might not be able to give you the best answer. I think it would be best, if possible, to ask questions about trading. If you can. Yeah. Or about strategies, overall approaches various other things. But, try it. Any questions you have, it's great to have a question, unless it's totally irrelevant. And maybe then it's fun. So, one of the things that I know, obviously, we don't usually look at CFDs on Walmart shares, obviously, but one of the significant factors that I wanted to highlight here is that Walmart has recently become $1 trillion company in terms of market cap. And that's very significant in my view, because this is the first retail company in the USA to breach that market cap of $1 trillion. In that previously, of course, we've had a lot of tech companies. Nvidia's has an enormous valuation now. It's GDP of various small countries, theoretically at least. And this is important because Walmart is the first company to reach retail company, to reach this significant milestone. And what does that actually mean for us as traders? Not that much, honestly, because this is just my opinion. CFD on an individual share like this is not usually going to be a great one to trade because of time zones. Most likely you will not be in the same time zone as the American stock market, so it might be a little bit awkward for you to find a time when this is open to trade it. And also because it's generally not as liquid. Individual shares is obviously not going to be liquid as an index. It's not going to be as liquid as a Forex pair or something like that. It's just something that's I think we can comment upon. And let's actually look at how we did last week with some of these positions that were set up. I would just stress that from last week, it's not live trading. This is a demo account. It's just these introducing these positions and setting the stops and targets is just meant for informational purposes and possibly instructional purposes to illustrate the overall principle of how we set up stops and targets. So we had a couple of not great ones, let's say. We certainly had some not great ones for gold and for dollar franc. And we'll talk a little bit more about gold and dollar franc in a couple of minutes. And we had euro dollar, which has not been triggered. And we have also euro yen, which is chugging along reasonably nicely here, still with no swaps, so that's nice. So let's look a little bit at some of the main charts for this week. If you have any instruments you want to be analysed, anything else you want to ask about, please by all means ask a question. That would be great. Follow-up question from Abhay Meta 1071. Can Exness process or can this broker-taker handle big payouts like $1 million per day? For one particular client, I honestly don't know. Abhay Meta 1071. Sorry, I think we need to ask the payments team, about that. Whether Exness can process for one individual client $1 million per day. I think it probably should be possible, in theory at least. Maybe it might take a little bit longer because usually people are not going to be withdrawing $1 million at a time. And we've got $1 million, maybe you might want to do something else with it rather than put it into CFDs, perhaps. That's just my opinion. If you have the opportunity, anyway, there might be something more productive to do with it than that. But in principle, I think the answer is yes. And maybe the best way to check would be to see what the limits are. Since Bitcoin, theoretically, yes, you could withdraw up to $1 million. But I am not sure what the system is going to do if you try to withdraw $1 million worth of Bitcoin in one request at a time. I don't know what's going to happen there. You could contact the payments team, or you could, I think probably best thing to do would be to check on Exness's help center. But theoretically, the answer is yes, it seems. Theoretically, yes. Or if you don't want to use Bitcoin, it should be because I'm not in I would assume I'm not in the same region as you, Abhay Meta 1071. So maybe you've got other payment methods if you don't want to use crypto. You could also, or if you don't want to use Nettiller or Skrill, there might be other methods of payment that you could use. I'm just not sure it's a fantastic idea to try to withdraw $1 million in crypto in one transaction. I mean, it would be easier just to split it down. So hopefully that answers your question. If not, I think probably Health Centre or support would maybe be your port of call. Yep. And Abhay Meta says, also, what's your view on BRICS currency and dollars overall view and compare that to movement of gold? Well, I think BRICS currency for us as traders of CFDs is probably something that's really a bit overblown. In that, will there be a common currency throughout the BRICS at some point in the future? Almost certainly yes. But you think about the economies and the politics that such a currency would be tied to, at least in part. I mean, you can say that, I think you could say anyway, that Russia and South Africa, for example, are not exactly the most economically stable countries in the world, or politically for that matter. Not that that means they're bad countries, it just means that maybe they don't provide the necessary stability for common currency to function. I mean, equally, why has the euro never possibly replaced the dollar as a reserve currency, even though it's I would argue, the other major reserve currency? Why will it not replace the dollar? One of the primary reasons for it, in my personal opinion, is that it's tied to the performance of various different economies which are not great, let's say, like various economies in Southern Europe. And there's a very large disparity also in economic performance, most of the time at least, between some of the larger Northern European countries and some of the smaller Southern ones. Some exceptions to that, but mostly that holds true. So when you've got a currency that's tied to performance of lots of different, very disparate countries, it's kind of difficult, I think, for that to have a lot of stability as a broad stroke. And generally, I mean, when we talk about this topic of the dollar and what could replace the dollar as a reserve currency, people losing trust in the dollar as a reserve currency, I think maybe this stuff is overblown. Yes, we probably expect the dollar to be not necessarily replaced, but gradually reduced in importance as reserve currency. Just probably not very quickly, and I'm not sure that's going to accelerate very significantly anytime soon. Just my take. Compare that to the movement of gold. I don't think that this discussion has that much direct impact on the movement of gold. I think the main things that have an impact on the movement of gold recently is, I mean, the debasement trade is something that we're talking about a lot, of course, but how exactly you frame it, what this actually means, is up for debate, I think, to some degree. But I mean, the broad principle that money buys less, inflation has been quite high for a few years, gold is a reasonably good store of value, and of course everybody sees the consistent uptrend. I think these are all there, these are all valid factors. And the fact that the purchasing power of every currency is being eroded now faster compared to what was typical or normal from the global financial crisis till about shortly before COVID. I mean, it's of course a lot higher rate of inflation pretty much everywhere is higher, with very, very few exceptions. So I think that's one of the main ones. I think that's one of the important ones. A debasement trade, however you might want to frame it. So, but let's look briefly technically at gold, and let's move on to a couple of other instruments. If you want to look at a specific instrument, please let us know. And I know we have another question from Abhay Mehta. Let's just move on a little bit with analysis, and then we'll answer that question. So, as we discussed last week and before that, we were talking a little bit about at the very end of January, we have this significant downward movement around when Donald Trump announces that his nomination for the new chair of the Fed is going to be Kevin Warsh. Kevin Warsh has historically been more hawkish and is less likely to be a Trump stooge. So there's the possibility that the Fed is not going to cut rates as much, or possibly even in the further future is going to start hiking rates again. And this, I think, combined with the fact that we had this massive up day on the 28th amid kind of euphoria in various quarters, is one of the key factors that's driven gold down, and also silver since then. And since then we've had reasonably, not extremely aggressive, but reasonably strong recovery. And so far I think there's not much obvious sign of an immediate push back down without a strong catalyst. Catalysts might come, I would stress, this week from NFP or from inflation. Maybe not for like an actual downtrend, but certainly catalyst for a drop below the 20 SMA, since that seems to be a possible short-term dynamic support around the 20 SMA. Whereas I think the probably more important dynamic support would be the 50 SMA from Bollinger Bands. That might be quite an important dynamic support, so something different there would be looking at. But I think overall sentiment seems to be at least moderately positive. Dollar recently has done not terribly, but overall it is, I mean, it's not strengthening significantly across the board, is what I mean. Hasn't done terribly bad, but It's not across the board getting significantly stronger. So that's one important factor. We don't really have that much of a demand for flight to safety right now, at least. So gold, I think, might just continue within a roughly similar sort of area. And generally 5,000, I mean, it's likely to be quite an important reference, whether as support or as resistance. I mean, currently I might argue that it looks more like a resistance, really, especially on the lower time frames. We're looking more at the area around 5,000 as possible resistance. But let's see. I mean, if the price can clearly hold above there for a while, then maybe we're looking at 5,000-ish as a possible support. I want to continue monitoring that. So, I mean, my take would be, I mean, bearing in mind, of course, that last week the entry was not great. I mean, as I stated, of course, in the live stream, the entry was not at all great last week. This week, I think possibly the entry is a little bit better. I would definitely be more likely to think about buying, just wouldn't be mad on actually doing that until we have the NFP come out, until we have American inflation come out. But I'm thinking like really quite aggressively. And based on all what I've said, and remember this is not a recommendation actually to trade anything, it's just for informational purposes only. If we can find a reasonably good ratio here, I would probably be thinking about buying. So let's go for about 4,650. I don't think we're going to get a great ratio here. No, we're not going to get a great ratio here. So yeah, I'm not really mad on that at all. And yes, that is obviously quite a far away stop. Yeah, of course, it's quite a far away stop. But right now, I mean, just given how big ATR is, you know, ATR is like nearly $200 on the daily chart. So that's very close to the highest it has ever been. So we don't really want to be set, or I don't really want to be setting my stop anywhere closer to about 1.5 ATR. I think that would be the absolute like maximum distance. So in that case, quite happy. I am at least quite happy just not to have a trade for this. Certainly not before the American job report and American inflation coming out later in the week. That's just my take. It's not a recommendation to do anything. If anybody wants, we can really like look hard to find a trade later. Of course, that's fine. And Eurodollar, I think the situation to some extent is kind of similar to gold, but of course here we have the lower value of a point, lower value of a pip. So I mean, I would probably prefer at the moment at least to be trading Eurodollar rather than gold with conditions of this volatility. ATR really super high, but it's not by any means close to like the all-time highs, the highest it's ever been, and we have pretty consistent volume recently. So, I mean, based on the overall, I wouldn't necessarily call this a trend yet. Definitely wouldn't call this an uptrend yet, but it might be an incipient uptrend, possibly. Maybe I would be inclined to favour buying. Just the primary concern here really is it was going to be very difficult to find a reasonably good ratio. And I think probably, I mean, one technique that can work in this situation is, especially because we're on a quite relatively high time frame here on the daily chart, I can at least set a target inside the wicks of candlesticks. So let's say if we look for the area roughly about 125, 120 and a half, 120 is a little bit too low. This is going to be very difficult to get a reasonably good ratio. Let's go for 120 and a half, right? So 120 and a half is our target, and we want to try to limit the loss. I mean, we could possibly go around the 20 SMA. I'm not sure I'm entirely mad on that idea because I don't think we're going to get a very good ratio. It's not atrocious, not negative, but I mean, this is really not a fantastic ratio in this context. But let's go for it. Let's see what it does. Right? Remember, not advice. This is a demo account. I just would anything really with the dollar in it for this week. Euro yen, for example, is okay, which we'll be coming back to in a minute. But many of the pairs with the dollar for this week, the reason I would personally not be super mad on going all in or even really trading at all until tomorrow is we've got the NFP coming up on Wednesday, and we've also got inflation coming up on Friday. So it'd be good to see what is the tone of these overall releases and then take it from there, in my view. Bitcoin, meanwhile, has not done well recently, of course. This is actually one of the things, don't want to go into too much of a tangent. I know we've got questions to come to, but this is one of the reasons why, I mean, I think there's some kind of skepticism over the debasement trade, in that if this kind of overall overarching narrative was valid, then you would expect Bitcoin to be a lot higher. Right, but it's not, and I think it's quite possible that it's going to be dropping a bit further. Maybe not in a sustained way, but certainly possible for it to drop back down to around 60,000-ish. So yeah, I mean, and recently there's been a lot of negativity. There's been a lot of outflows from, I mean, not outflows, but I mean, certainly lack of inflows to ETFs. We can look a little bit at yeah, volume for futures. I mean, as the counterpoint to that is, let's look briefly at volume for futures. There has been significantly higher volume recently, but overall, like, it hasn't really been all that high in January and February. And usually, we'd expect to have higher volume going into futures for buying, at least, if you want the price to go up. Whereas, I would contrast with CFDs. I would stress, of course, that this is just Exness's volume for CFDs on Bitcoin. This is just one broker, right? There's loads of other brokers, of course, and there's deliverable Bitcoin. But what we see here is a significant, like, actually pretty massive drop off in volume. At the beginning of last quarter, at the beginning of the fourth quarter, hasn't really clearly recovered yet. It's got up recently slightly, but it hasn't really clearly recovered yet. So the overall downtrend that we've got since then, I certainly would say this is a downtrend since October of last year. It's not supported by volume from here, at least. So that's why I think there's some questions about how far, how low this is going to go. But cryptocurrency being a cryptocurrency is quite likely, I think, to retest the recent lows. So if you look at the OHLC for this, the low was just slightly below $60,000 from the 6th of February. And we can see that from the pretty successful bounce, yes, on the 6th of February, for the moment I'm ignoring the stochastic. I know some people obviously don't like the stochastic. It generally is useful for crypto, it's usually not. It's just there by default. Ignore the stochastic, just ignore saturation totally. And I think we can say, well, while that does look like a big candlestick, yes, on the 6th, we don't really have much follow through. We don't really have much momentum like following through to push it back up. So it's possible, yeah, we get this kind of like sideways action, not really whipsaw, but like a sideways action before there might be another possible test around 60,000. I mean, that is one scenario, right? And I mean, in this case, of course, I think there's quite a lot of limitations to that approach, let's say. But if I am thinking that it's not really terribly likely for it to push, strongly above 71, like, if it gets clearly above 72, it's probably keen to keep going and going and going and going. That's one approach to doing that. So, yeah, all right, because I've clicked on the wrong button. Sorry, right, I was just thinking, why is that not working there? Slow day. Yeah, so that way we get a reasonably good ratio. I do get a very good ratio, I think. But of course, the big risk here is this stop is very, very, very close to the price of entry. Relatively speaking, it's extremely close to the price of entry. But I mean, I would stress this as a demo account. It's not a live account, not actually doing any live trading. It's a little bit difficult in this situation when the price is close to like such a significant low, because actually to see the price this low again, I think you would probably have to go back to before 2024's elections, right? Yes, you would. So, I mean, we're actually pretty close to the starting point just before 2024's election. It's quite a significant low. I mean, I think it's kind of questionable, even for cryptocurrency, whether we want to be trying to sell momentum, or even worse, to sell a breakout around a low like this. Just seems to me like a little bit of a risk. One way to de-risk this trade, in my personal opinion, would be to wait for a bounce that looks like it's kind of petering out, maybe around like 80-ish. I don't know whether it's going to get that high, but like emphasis on the ish. This kind of area here around 75 to 80-ish, and then selling in from there. So in that case, we're using a sell limit. Possible to do that. Just depends really how urgent you are to enter such a trade, how confident you are. As that would be one approach, in my opinion, to de-risk it somewhat. So let's look a little bit at the chat and at the questions, and then we'll go back to do some more major pairs, right? Abe Meta 1071 says, what's your take on current market situation right now? Shed some light on people saying that there is an AI bubble and there is a market overvaluation. Well, yeah, I mean, whether AI is a bubble, I think is a question that depends how you define a bubble. I mean, is there a market overvaluation? Well, yeah, I mean, there's certainly an overvaluation. Depends, of course, how you want to measure it. But if you take the actual yield of shares, let's not go from NASDAQ, I think is maybe a little bit easier to use. But you can use Yahoo Finance as well. And you just simply look at the dividend history. I know, of course, like tech shares in general, they don't usually pay actual dividends. I mean, but look, it's gone the other direction. They've actually reduced the cash amount of dividends that they're paying out, Nvidia. And even if we take theoretical earnings, right, which they are reinvesting, apart from this 1 cent that they pay as a dividend for holding the share, right? The actual earnings that they're reinvesting, it's like 65 ratio of price to earnings. Obviously it's overvalued based on this traditional measurement. Of course, this is, I would stress this is a very old-fashioned way of measuring the valuation of a share. It's pretty crude, because if you look at the average valuation of average PE, S&P 500. Oh, this takes me back, doesn't it? Yeah. Something like... no, I want it now. Sorry, I don't want AI. Yeah, so something like about 15 to 17-ish, right? And max is 123. So, you generally, based on this approach, at least, which I would stress is simplistic, then many shares, not just NVIDIA, loads of shares are horribly overvalued. It's not really a great time to buy in. Is there an AI bubble? Depends really how you define it. I think to some degree, if you look at what have been the actual developments in AI recently, if you look at how, for example, Grok has developed, just taking that as a random example, you look also at developments in ChatGPT, I would say subjectively it's slowed down. These tools subjectively, I think, have slowed down the development. How fast and how rapid the development is. Because if you compare, now that we're on X, you compare that video of Will Smith mashing the spaghetti all over his face. It's auto-generated from 3 years ago. It's a damn mess. Whereas if you look at it from about a year ago, it looks almost as if it's real. Whereas there hasn't been within the last 18 months or so, these kind of really mad big improvements in many popular AI tools, I think. Does that mean that it's a bubble? Not necessarily. Depends how you define it. I think this is a matter for debate. Abe Meta. Is there an AI bubble? Depends how you define a bubble. I'd say possibly yes, but we don't really know until it bursts. And is there overvaluation in the markets? Many markets, based on traditional metrics at least, yes. There is a horrible overvaluation, yes. Not a good time to buy at all, various things. Just my opinion, I would stress. And Joyce Kitau says, hello Michael, better late than never, we'll have to rewatch. Joyce from Kenya, one of our regular watchers. Welcome Joyce, thanks for joining us. And yeah, sure, rewatch if you want, but I'm not sure you necessarily have to. Abe Meta says, thank you Michael for answering. Yeah, I'm trying. You're welcome. Thanks for asking the question. Some things, of course, I don't know everything. Sometimes I feel like I don't know anything, and that's actually good as a trader. Sometimes I feel like you don't know anything for sure, because second guess yourself means you can learn more. But it's also informative to have this kind of question, to think about this more. Yeah. So thank you for the question, Abe Meta. And Thapelo Taukobong E5Q says S&P 500 analysis. Yes, let's do that. Let's analyze the S&P 500. So as I was just saying with the previous question, I'm not going to get it like that, am I? Sorry. So as I was just saying with the previous question, well, many shares are quite horribly overvalued at the moment, right? But overall, stock markets seem to be chugging along quite fine. They seem to be more or less positive that, okay, we're going to be getting these cuts from the Fed. Fed's very likely to be doing 2 cuts this year. No significant change there recently. Overall earnings season, as we looked at in the beginning, let's go back to it very briefly. Overall earnings season this time has been really positive, with some very few notable exceptions. Earnings season has been positive. Disney up here, has beaten the consensus, but has missed the previous. There are reasons for that. Other than the overall market conditions, Disney's individual performance recently has been quite poor. We can talk about that a little bit more later. So overall earnings pretty positive. Outlook in terms of monetary policy pretty positive. And fiscal policy overall, nobody really knows what's going on with tariffs a lot of the time. One day you've got Donald Trump, he's like tariffs. Then the next day, backs down, taco, Trump always chickens out and all this stuff. So, that's kind of difficult to predict. So, but, it's hovering quite close to highs. And we've got 7,000 just a little bit above. So that's why I personally think, Thapelo, it's not really a great time to be trading as a CFD. In general, recently, if you've been following these live streams for a while, as Joyce has and a couple of other people have as well, Who else do we have here as a repeat watcher? Yeah, Ryan Jarius. Yeah, Ryan has been here a few times. Yeah, thanks for coming back. So you guys will remember, of course. But since the indices are so close to stops, and since there's no obvious catalyst to drive them higher, this is not great for us as traders of CFDs. It's fine for ETFs. If you're using dollar cost averaging, or you're putting a certain amount of money like regularly every month into ETFs, fine, yeah, buy up pretty much whatever price you want. Whereas for CFDs, it's not really great to be buying in here. What you might want to be waiting for, I think, is possibly some other day of like significant, not necessarily panic, but worry, consternation, whatever, like we had at the end of January. Because even though, I mean, if you look at how indices reacted to this meltdown for metals, didn't really care. I mean, you've got like pretty trivial movement, like on the 29th and on the 30th of January when it was a rout for gold and silver. Silver's biggest daily decline ever recorded on the 30th of January is down about like 26% or something like that. S&P 500 don't really care. It's only down about 0.35%. So I mean, it's not really that obvious to me what is going to push it down significantly to find a good entry as a CFD. So I would just probably wait out. And I mean, maybe you remember, some of you at least remember, we did have a pending order for the Dow a while back, and it never even got triggered because it didn't get low enough. So, I mean, certainly the direction, in my opinion, Thapello is buy. The direction is likely to be up in the longer term. I mean, it's pretty much always the case for indices. Just not sure we can find a very good opportunity, to do that as a CFD. I mean, maybe you set it around the 200 SMA, like you could set a buy limit around 6,650-ish. So let's go for that. 6,650. Just to think you need to be kind of realistic about it and set the target maybe about 7,100. That's relatively conservative. And I mean, we're not going to make very much money, but that's okay. Yeah, not going to make very much money at all. Maybe set about 6,500, yeah. Yeah, I mean, I'm not sure really what the point is of doing that, because I'm not sure it's going to be going down there anytime soon. And if it does go down there soon, well, maybe it's just going to breeze straight through there. Since, I mean, if that happens, then almost certainly we have some kind of new narrative. We have some significant change in the narrative structure of markets, So S&P 500 for me doesn't look super interesting to trade as a CFD right now. It's just my take. Yeah. If you want a more specific angle, Thapello Taukobong E5Q. Sorry, I'm not pronouncing your name correctly. If you want a more specific take on it than that, by all means, ask another question. You're welcome. And Joyce asks, how would you summarise market reaction to lower high PMI, CPI, PPI, NFP? Well, NFP and inflation, CPI, Consumer Price Index is inflation. These are usually the most important ones. PPI and PMI, I mean, I personally don't usually trade these as CFDs. I go into this actually in the article in some detail on Exness Insights. Let me just see if I can find that. Just so I can send you that you can see the link or something. Why is that in Spanish? That's a great question, Michael. I don't know. Should be somewhere in here, you would think. Because I think it's a reasonably good article, actually. Maybe let's go back. Exness Insights, PMI. Sorry. Give me a second here, please. Yeah, Exness Insights, PMI. I mean, the simple answer is that, yes. So this is, I think, there's various other articles from other people, but I mean, here I kind of summarize, like, this is why I don't think it's really a great idea to use PMI to actually trade with, because there's almost certainly like other stuff that is released around the same time as PMI that's way more important than the PMI most of the time. I mean, I think usually if you have like consistently low PMI, people are usually expecting you're going to see lower inflation, you're going to see possibly looser monetary policy. That's one factor. Higher PMI, you're going to see higher inflation. It can be one of the early signs of higher inflation. Yes, that's true. Whereas with the NFP, I mean, it depends on the context as well. But I mean, generally speaking, when you get a higher NFP than expected, particularly if it's significantly higher, you'll usually get a strong initial reaction upward by the dollar, in most of its pairs, strong initial reaction downward by gold, which is retraced to some degree. And it might continue for a while, but usually not for a very long time. Usually one NFP is not going to change an established trend. There's some exceptions to that, but this might be a good topic for an article to go into more detail. And same with inflation. Most of the time, if you get higher inflation, some exceptions to this, of course, depending upon what the central bank is doing. So this is a bit more complicated than with. It's a little bit anyway more complicated than with job data. Then when you get higher inflation, typically but not always, you would expect that the dollar is going to do at least a little bit better, because it's likely that rates are going to be hiked and gold is going to do at least a little bit worse, despite the fact that it's a hedge against inflation most of the time, because rates are going to be hiked. So people are going to expect rates will be hiked when inflation rises. But there's lots of exceptions to that depending upon the context. Depends what the central banks are going to do. I think when you're looking at inflation data, this Friday's inflation data, I think we have to take the consensus and the forecast combined with, okay, what is the context? When is the Fed expected to cut next? What are they going to cut to? What's the direction in the further future? I don't think inflation is something that's very good at all to trade in isolation. I mean, that's a simple answer. I don't really want to go into a lot of detail. I would stress it's just my opinion as well, Joyce. Thank you for the question. I don't want to go into lots and lots of detail because, we're going to run out of time. This is a topic for, a whole webinar, a whole article, really, and to summarising the reactions to these different data. But the simple answer also is you can find more on Exness Insights. Because whether it's under deep dives or there's various other places where you can find this kind of information. It won't be under essential learning. You can just browse Exness Insights. You can get lots of ideas, tips, personal experiences from a range of different traders, not just me, also my colleagues Chris. Here's Daptong, here's Andreas, here's Chrisada with a K, and they have lots of different experience with loads of different strategies, approaches. So it's good, I think, to read some of the stuff there, and you can get more of a kind of balanced viewpoint than just what I think, which is often, not that useful. Nizam Khan E9W says, I'm a new trader. Well, welcome, Nizam Khan. Welcome to trading. Good to have you here. Start slow, in my opinion. This is important to start small, start slowly. Yeah. And be patient. So if you have a question, Nizam Khan, please by all means ask a question. It would be great to have a question. So we're nearly getting to the end. I just wanted to talk a little bit about if you have had a good stream. Oh wait, before that, I wanted to talk a little bit about when is Kojo going to be here. Is Kojo going to be here tomorrow? That's a great question. I don't know. If Kojo is here, if Kojo is doing his live stream, Kojo's live stream is going to be on Wednesday. Don't know actually for sure whether he'll be here tomorrow, but hopefully he'll be here either tomorrow or next Wednesday. At some point he'll be here. So please join Kojo's stream. Of course, he does his in a different style. So if you don't like this stream that we're doing now, that's fine. You can go to Kojo and you can watch Kojo's stream. Or even better, you can watch both. And then, you get a fuller range of opinions and approaches. And our next stream will be a week today, 17th of February. I'll be back again. Andreas is still on leave. So Andreas will be back next month. But for next week, it's going to be me again. And in the meantime, please follow us on social media. On X, you can follow our individual accounts, which is... you can follow my account is... Exness, usually posting every day, replying every day, and I could also get back to you there if you have anything you want to talk about. You can follow some of my colleagues like Tomislav, for example, as a trading trainer. You follow Terence as a market strategist, is also a fairly regular poster. Stan is my immediate colleague, he's pretty active on X, and also on TradingView, Inky Cho, Leaching, yes, and Andres. Various people from Exness you can follow here. Who are sharing their insights, their opinions, and so on, and also, of course, Exness's main account. And you can follow us also on TradingView. And you want to get ideas for trades? You can watch the. Actually, it would be quicker to do that, would it? Yeah, you can watch the trade of the week. Every week we have an idea for a trade, which usually. We try to trigger it within a few days of the video being published. Just mute that, and we do track the results. So every week, you can follow this, see how the results are doing. Are they doing okay? Are they doing not okay? Usually, I think they're doing okay. And do you like the idea? Of course, I would stress it's not a signal, it's not a guarantee of success, just an idea, something that you can possibly draw inspiration from. And various podcasts also on YouTube. Anything else I want to plug here? No, I think that's about it. If anybody has any more questions, that would be great. Otherwise, I think we're probably just about done. So, in summary, key events that are coming up this week are primarily the American job report, which is tomorrow, key release, rearranged due to the partial shutdown. And on Friday, we've got American inflation, core and non-core. And I think it's also important to be looking at British data. So I just want to very briefly, if there's no question, very briefly look at oil, and also want to look very briefly at cable. What's about funding accounts, says Nizam Khan. You can find all the options to do that in here. All the options you can find for funding your account, you can find in Exness's personal area under payments and wallet deposit and withdrawal options. Yeah. So you can look at that. Yeah. But generally, Mr. Nizam, I'm not the best person to be asking, because here in this stream we're talking primarily about analysis and about trading and about strategy and approach and so on. We're not doing live trading. This is a demo account. I would stress we're not doing live trading here with real money. This is a demo account. These are only for informational purposes. These positions, this is a demo account. It's not real money. But if you have any questions about that, then you're welcome. And you can also use Exness's help center. It should be get.exness.help. Unless they've changed it. No, I don't want to read that in Arabic. If you are, I would guess, Mr. Nizam Khan, you're from Pakistan. Perhaps you're not. I don't mean to be offensive, of course, if you're not. But you can read it in Urdu if you want to read Help Center in Urdu. You can read it in various different languages. Don't necessarily have to read it in English. If it's easier for you to read it in Urdu, do that, or any other language. Yeah, I mean, off the main website you can get the help center, and there's lots of information about payments you can get here. Okay, so hopefully you can get an answer there if I've not answered enough, and it's helpful just to fiddle about with the client area, fiddle about with this stuff. Yeah. So hopefully it answers your question to some degree. Okay, cool. Right, so where were we? Yeah, let's look briefly at oil, and then let's look briefly at cable, right? So crude oil on the daily chart is actually looking pretty good, so that's nice. I mean, since last week we had the idea in the trade of the week for this to move up and possibly test the area around 65 or 67. I mean, it hasn't actually tested 67 yet. I just think I'm reasonably positive that might happen. I'm certainly not certain about it. Whether I would actually enter here with a target around 67 is kind of questionable. But I mean, if we just look at it initially from the technical point of view, we have not quite double bottom or triple bottom, but it's pretty close. I mean, this we can see here from early January compared to October of last year, double bottom, yeah, looks like. Whereas this is a little bit lower. And I mean, I certainly don't think we can classify this pattern as head and shoulders. But since then, the point is, since early January, we've had a pretty successful bounce with pretty moderate to high volume, right? And volume in particular, since the very end of January and early February, has spiked. It's gone up quite a lot, at least for the CFD. So that's why I have some degree of positivity. It might continue up. And I mean, what are kind of some of the fundamental narratives? I think one of the main ones is not necessarily confirmation, but like strong hints, let's say, that various producers in OPEC Plus are not going to expand their production very significantly in the near future. Because Saudi Arabia, okay, it's true, they did expand slightly, very, very slightly between October and November. It's one of the largest producers, but between November and December, it's on hold. So it's possibly significant. Maybe they've reached a plateau for the moment. And I mean, I think you can compare with various other countries' production. USA oil production, is that going to give me something? Oh, that's good. Okay, nice. Whereas in America, I mean, it's going up recently, and I would just stress, of course, the problem with this when you're looking at data on oil production in the USA is it really lags. So that's what makes it like like a lot more questionable, I think, to use in Saudi Arabia, for example, because Saudi Arabia lags, yes, and other countries like Russia or, I mean, I don't know, whatever other, like Venezuela, whichever producers you want to look at, Mexico, Norway, whatever, they lag, but the USA really lags a lot by like usually a whole quarter, possibly more. So that's why I think it's kind of questionable to what extent you can use that. But I mean, based on technically speaking and like very broad stroke kind of fundamentals, looking essentially positive. Just not sure whether it'd be desperate to jump in here, right? So what else I want to look at? I also want to look at cable, and then we think we're just about out of time. In that we have a lot of major data coming up that's likely to affect cable this week. And right now, if you're following the British news, of course, that's fine if you're not. But if you wanted to follow the British news, and let's not talk about that for now, lots of political intrigue right now. Because calls for Prime Minister to step down, which is not new, but there certainly seems to be more of them this time. There seems to be more kind of active campaigns behind various possible replacements. So if the Prime Minister steps down, then probably we get some kind of negativity, at least slightly, for the pound. Meanwhile, we've got this important data coming up this week. So I think that's something definitely to watch. And potential opportunity, I think, bigger opportunity if the direction is downward, but still opportunity if the direction continues upward. So, I mean, to actually formulate a position and figure out, okay, what are we going to do here, I think we need to wait, or I personally at least would like to wait for tomorrow at least to get the NFP out and then see what's the overall direction from there, then take it from there. So that's one of the more important pairs for this week, definitely. And we're just about out of time. We'll see if there's any more questions, then let's go. Didn't understand the line that you drew. If you could specify which line is Khan, maybe it would be better to do it next week because we're just about out of time if you'd be here next week. But the lines on this chart, we've got moving averages, which are calculated based on what is the average price over a certain number of periods, 20, 100 and 200. Bollinger Bands moving average just with standard deviations that can help us to find overbought and oversold. You can find out a little bit more about this sort of stuff on Exness Insights. And we can discuss it certainly in more detail, Mr. Nizam, next time. Yeah. I don't think we really have time to go into this now and really at the end. Yeah. And Alimran95 says, hello, sir. How are you? I'm fine, thanks. How are you, Mr. Alimran? Love from Bangladesh. Love to Bangladesh from Exness. What new innovation in Exness? Very recently, not that much that I can think of. I mean, the main innovation within the last few months that's relevant to what we're talking about here is the economic calendar. Has been significantly, like really massively improved, the economic calendar. So that's great. That's happened relatively recently within the last few months. Also within the last few months, spreads for gold have been cut. But I mean, right now you will see, of course, spreads for gold have increased with every broker since what's happened within the last 2 weeks. So as Exness average spread is still lower, it's just not as low as it was before this happened. You know, and other factors, of course, the price is like $5,000, and briefly it was like about 5,500-ish. Then, of course, the spread's not going to be to the same as it was when it was like 2,500, 3,000. But still, the spreads remain relatively low compared to the average in the industry for gold, so that's good. That's not particularly new, though. Other than that, I don't think there's any obvious new innovations that I can think of. Maybe I'm missing something here. These just seem to be like the highlights. Yeah. So I think that's about it. Thanks everybody for the questions. That's been great. Just a reminder, please subscribe, follow us on YouTube to know when the live stream's coming out, and also to get the other stuff, including the podcasts like the Born to Trade podcast, also Trading Talks podcast. Maybe that would be helpful for you, Mr. Nizam Khan. I mean, there's some good discussion usually in there, and hopefully Coach will be with us again soon. If not tomorrow, then next week on live, and to be notified as soon as we get Kojo's live stream, then please subscribe and turn on notifications. Make sure that notifications are on. I don't think you want to turn it all on, but you turn them all on if you want. It just depends on how much you can tolerate your phone beeping, but turn them on at least to some degree, yes, and then you'd be notified about the new videos. Please follow us on social media. You follow us on X, at mstarkexness is me, and there's also various other colleagues you can follow. And next week we'll be back for another live stream in the same place at the same time. So hopefully join us then if you have a good if you have a good time in this stream. And if you didn't have a good time, of course, it'd be great to hear why not, so that we can fix it for next time. Yeah, so I think that's about it. If you have any further questions, please, next week we will cover them, hopefully. And in the meantime, I would wish you a successful, responsible trading. Just remember, NFP coming up tomorrow, rescheduled. Need to be a little bit careful, manage risk around the time of the NFP. And hopefully see you next week at the same time. So thank you for joining. Thank you especially for all the questions.